Underwriting is a skill. It's an art to learning how to input the numbers and how to evaluate these properties. If you would like to learn how to underwrite properties like this or properties like that, then come and join my coaching program. My contact information will be below. Now, let's go watch the video for a commercial multifamily mastermind. All right. I'd like to welcome everyone to the Commercial Multifamily Masterminds. My name is Darryl Murphy. I'm the host of the show. My co-host is Alicia Milton. We are a member, the Commercial Multifamily Masterminds is a member of the GOB Network. And the GOB Network seeks to democratize commercial real estate by mentoring and deal making by providing the resources and what it takes for you to help you get that investment opportunity across the finish line. So in simple terms, our mission as the GOB mission is to provide you with the education, network, support, and opportunity to help you get your investment across the finish line. So the mastermind mission, our mission here is to get rid of that competitive mindset. It is here where we would do everything in our power to assist you by providing you with the education, the network, support, and opportunity. So here in the mastermind, you have different skill sets of individuals. And we have those in this mastermind that you will need to help you get your investment across that finish line. Okay. So I want to say welcome to the Commercial Multifamily Masterminds. And we are a member of the GOB Network of Apartment Investors. Now, the mastermind principle, the coordination of knowledge and effort of two or more people who work toward a definite purpose in the spirit of harmony. Now, we know about Napoleon Hill, Think and Grow Rich. That's where that quote came from. T.D. Jakes said in Disruptive Thinking, his book, Disruptive Thinking, a team is composed of like-minded people with different skill sets, but equal commitment toward measurable outcomes. So here, that's one thing that we strive for. Work together as a team. And inside here, you're going to see people with different skill sets, but we're all working together to help each other get that deal across the finish line. So, as I mentioned, we are a member of the GOB, but the founder, the creator of the GOB is Jim Biggs. So at this time, I would like to introduce to you the founder, the creator, Mr. Jim Biggs.
Hello, this is Jim Biggs, founder of the GOB Network. I think most everyone knows that we started the network as a member-driven platform to help more people get deals done. Whether you're a new investor that has no clue how to get started, or you're a seasoned investor and you're just looking for more net worth liquidity, or other pieces that might be missing from your team. As an example, we recently sponsored a 134 unit deal in Houston, Texas, an 88 unit deal in Tulsa, a 34 unit deal in DFW, a 28 unit deal in Baton Rouge, a 24 unit deal in Dayton, Texas, along with 42 units of self-storage. All of this was with members of the GOB network. And we have many more LOIs, many in negotiations and under contract. These are just a few examples of deals. They came to us and we helped them sponsor that deal. So I just want to use that as an example of what we're trying to do to help everyone that's on the platform. And it's available to anyone. If you're interested, just go visit thegobnetwork.com. Also, I want to say how proud we are of the many faces of the GOB network and the many places that are represented. Thank you for being part of that by being here today. So let me close by saying to you, get on board, because the GOB network can do the same thing for you. Oh, and one more thing. Let me say we are especially proud of Daryl Murphy and his mastermind group, and to have them as part of the GOB network. Daryl is one of the founding members and sits on the board of advisors for the GOB network. Thank you very much to my friend, Daryl Murphy.
All right. Thank you, Jim. Thank you very much. Thank you very much. So now what I would like to do is introduce or let our, as I spoke, we are a team. So within the team, we have family members, and these family members help us get our investment opportunities across the finish line. So some of these family members are uh, uh, um, um, those that do the survey. Boy, I just, can you believe I just had a brain freeze? But I'll let him explain what he does, and I'm going to take it from left to right. And did he leave? Oh, there he is. Mr. Mark Gross. Take it away, Mark, because I totally just got a brain freeze.
He didn't leave, but he can't unmute or show his video. He's having technical challenges.
Okay. So Mark Gross does
Cost
help me out.
segregation.
Cost segregation, golly, man. I couldn't for some
For
reason.
CSSI.
Exactly for CSSI. So if you're in need of a cost segregation study for your property or anything, please. I don't know if he's able to put his contact information in the
Yeah, we'll
chat,
get it.
but I will say please reach out to him, because he'll be able to put his contact. You'll be able to reach out to him. So so
short tweets, emoji.
short tweets, emoji. Okay. Anyway, Commercial Multifamily Mastermind, we're on Facebook, and I would like to ask you all just to join our Facebook page. We have all sorts of news information. I try to keep everyone up to date. See, we have a guest today, and I try to keep everyone up to date on what's going on in the markets, so that you could, you'll stay afloat of things, and also let you keep you up to date on what's going on with the feds, right? You got to stay what's going on with the feds. You could post in here if you have questions, if you want to share a news article or something like that. The only thing you won't be able to share is your deal, or if you come here like trying to solicit, that won't be approved. But other than that, education is what I'm asking you all to share to help us grow, right? If you want to be a member of matter of fact, while you're on the Facebook page, you might well come on over to the GOB network page and join us, right? Again, a lot of education. Jim is here. Jim's on both of the pages, but a lot of information is always provided. Always provided. Okay. All right. Next, if you want to connect with me on LinkedIn, please do so. That's my name right there, and just reach out to me. I'd be more than happy to connect with you. I will ask that when you do connect with me, just put a little something in the message box or the note box saying where we met. so that way I don't have to go through and read your whole bio and all of that. Okay. And then help me get to 1,000. I got 261 subscribers. If you haven't subscribed, please come on over to Commercial Multifamily Masterminds here on YouTube, because we have a lot of videos, a lot of educational material. We do capital raise strategy session, we do underwriting, and so forth. So I'm just gonna say, please come on over, look at the videos, and feel free to, as they say, what they say, give us a thumbs up and please subscribe, right? Thumbs up and subscribe, right? Help me get to 1,000. Help me get to 1,000. Okay. And if you would like to be a member of the GOB, go on over to gobnetwork.com. We will be more than happy, and we would love for you to be a member of the GOB. All you got to do is click on become a member, or if you want to become a sponsor, you can either one, right? Click on a member, fill out the information here, and someone will get back with you and to get you into the network. Okay. All right. So today we have our special guest, and I think I met Joseph James several years ago. Matter of fact, I joined ROI-Muse before, and I do believe it was before his underwriting tool was set up the way it is now on the platform, where you could just no, that's wrong. It was already set up when I joined. But I loved the platform. I really did, and it was fantastic. And everything. So I want to read a little bit about Joseph James. Who is this guy, right? Who is Joseph James from ROI-Muse? Or should I say Joseph James CCIM from ROI-Muse, right? So just to give you a little bit of information about him, right? So Joseph James, I'm looking for my point. So today we're honored to have with us a distinguished guest whose name is synonymous with innovation, education, and success in the commercial real estate arena. So joining us today is Joseph James. He is the founder and the CEO of ROI-Muse Solutions, a PropTech company that has been a game changer in the industry, and I can vouch for that. Joseph's journey in commercial real estate is nothing short of inspiration. With a passion for empowering agents and investors, he has created a suite of tools and educational resources that have transformed how professionals approach multifamily and residential deal analysis, marketing, and client relations. But Joseph's contribution don't end with software. He is a fervent educator. Please mute yourself. He is a fervent educator, having trained over 12,000 agents and investors, and personally coached more than 300 students, guiding them towards success in their real estate ventures. His expertise as a multifamily deal sponsor and asset manager has brought numerous passive investment opportunities to investors, demonstrating his commitment to elevating others in their investment journeys. Holding a certified, and I'm going to change this a little bit, holding a CCIM designation, which is Certified Commercial Investment Member, and armed with a bachelor's degree in computer information systems and an MBA, Joseph's blend of technical acumen and real estate savvy is unparalleled. He resides with his family in the Dallas area, where he continues to innovate and inspire. Joseph, I want to say welcome to the Commercial Multifamily Masterminds. It is absolute pleasure An absolute pleasure to have you here today. Thank you for coming.
Thank you, sir. Thank you, Daryl. Thank you, Alicia, for inviting me. Pleasure to be here. And man, nobody has ever spoken about me like that. So thank you. That makes me feel good. But I am nothing. I am just an ordinary man, just like everybody else here. Right. So we like to make friends and we like to help people. So we believe in the same things. What your mission is very much my mission. So that is the reason why, I always follow you, Daryl. I've known you for several years now, and you and Alicia, and I follow you guys and what you do. And what we do is something similar. And I see some familiar faces in the group as well. So hi to everybody.
All right, thank you. Now, I know I've read just a little bit about you. Is there anything that I left out before we get into underwriting?
No, that's it. I think that's more than what I think I know of myself. So I don't know where you take that up, but it's all good.
All right. So, the Commercial Multifamily Masterminds, our platform is an educational platform. And what we do, we discuss underwriting. I feel that underwriting is very important. I think it's even more important than capital raising. Because if you can't underwrite, you can't capital raise. What was it that made you get started and focus on the underwriting aspect of commercial multifamily?
Well, I think basically, when you're looking at deals, there is no such a thing as a perfect deal, right? It's what is good enough, right? So I think a lot of the time people get stuck with, oh, this is not a perfect deal because they were just told that you are divided at a certain cap rate or you're divided at a certain IRR, certain cash on cash return and so forth. So we wanted to kind of make it simple and break it down a little bit for especially folks who are starting out to say that, if you're going to underwrite, basically most of us underwrite deals so we can raise capital for our deals and get deals done. And if you're going to do that, you should be able to talk about the numbers. Even if you're not doing the work, maybe somebody else is doing the work, but you should know exactly what that deal is and how you're going to present it to your investors and be able to answer any concerns or any questions the investors have. And that is why underwriting is so important, so that not only, whether you do it or somebody else do it for you, exactly, what assumptions you made and, and I always tell people, the purpose of underwriting is to find out what is the most likely scenario of that investment that you're about to take, and also what is the best case scenario and what is the worst case scenario, like what is your upside potential, what is your downside risk. So we always tell people, always look at that perspective, right? There is no such a thing as a perfect deal. What is upside potential? What is the downside risk of this particular deal?
Gotcha. When you're looking at an underwrite, matter of fact, you're getting started in your underwrite. You got to. Matter of fact, let's back up just a little bit because there may be some new people here that doesn't know about underwrite, what it is or whatever that is. What would you say your definition of underwriting is? What do you need to do your underwriting?
Yeah, so there are several pieces of data we collect in order to underwrite. But the ultimate goal is to make a decision whether you're going to pursue that deal or not, right? Part of making that decision process is to be able to analyze the deal, underwrite the deal, to find out, what is the deal going to look like? If I sold it in 3 years, what's the deal going to look like? And it's basically the simplest way to explain this, Daryl, is look at this as a business plan. Underwriting is writing a business plan. There's nothing more to that, or vice versa. I mean, it could happen that you think about your business plan and then you are putting those business plan into numbers. That is literally underwriting, right? So you have to have a vision for each property. What are you going to do with that property when you buy it? And then think about, what needs to happen for you to get that results that that you can get. And then that becomes part of the underwriting, right? To say that if I do X, then I can get Y results. If I do, A, I can get B, right? So it's a cumulative, it's basically adding up all those different, strategies in your business plan, in order to, put it all together, right? So you can present, the deal as a whole to your investors and your team.
Oh, you mentioned about vision, and a lot of times when I hear the word vision, I'm thinking of the future, of course, the vision. But do you ever have to say, I need to know, I need to, if I could see what happened in the past, does that also play a part in underwriting? Not just the vision of moving forward, but the vision of what happened before.
Yeah, of course. I always remind myself, if the person who was running this property before me couldn't get it done, what makes me think that I can get it done? So that is always the first question that I ask myself, or our team. If the people who were running this before, if they couldn't achieve what I think I'm going to achieve, what makes me think that I am better than them, right? And most of the time, it may tell you the truth that there is really, I'm not better than them. They have tried everything. The property is not going to work. But sometimes it's the opposite. Like you say that these are the things that they really missed, or for various reasons we know, right? Maybe they ran out of budget, or something changed, in the way they operate the property. So we'll have to look at deal by deal and see, is it really possible to turn that property around? But we always have to exercise caution, knowing that if somebody else couldn't do it, then what makes you think that you can do it, right? And if the answer is yes, then we'll dig further. But if the answer is no, we'll move on to the next deal.
Gotcha. Okay. Seeing where we are today in the market has gone through a lot. It's up, down, all around. Interest rates bouncing. Have you had to alter or change the way you underwrite?
Yes, of course. Everybody had to, right? The whole idea of underwriting is making assumptions for future, right? That's what we do in underwriting, right? So those future assumptions have changed, and the current assumptions have changed, right? And for example, would be I operate mostly in the Texas market, specifically in the Dallas market, and we can see that just a year ago, 2 years ago, there was about 8 to 10% rent growth, annual rent growth. Now that rent growth is really flat, and in some cases negative. So I don't see many people underwriting a deal with a negative rent growth. You look at Austin market, for example, the rent growth is really negative. The occupancy is dropping. And when you're underwriting, I don't see too many people underwriting with a negative rent growth to say a minus 3% rent growth, right? A minus 1% rent growth. And some markets is minus 5%, 10% rent growth. So you have to be realistic about what's happening in the market and then factor that in your underwriting, so you don't end up overpaying for a property in a declining market.
I'm going to get back to that rent growth because I like that. And I want to ask you a question about that. But market, I also do some coaching, right? And in my coaching program, they can't have no more than 2 markets. That's it. You can't have 5, 6, 7, 8, 9. And the reason why I do that is because I think you should know your market better than anyone. You should know what's going on inside, outside, and all around that market. And to me now, there's just no way you can know your market if you got 10, 20, you bouncing all over. And I'm telling everyone, I used to do that early on. I was in every single state. So looking at knowing that you're a coach and everything, what is your point of view on markets? How do you feel about having more than one market to and stuff like that?
Yeah, so before I answer that question, though, so we all know that deals can be done in any market, right? So you have to, and not only any market, you can do deals in any market cycle. So a lot of the time, you cannot time the market perfectly. And we all knew how to time the market, then we'll be all much more farther ahead in our journey, right? So you can, if the idea is you educate yourself, you become savvy in how to look at deals and how to look at each opportunity by itself. So we can do deals in up market, down market, side markets, whatever market cycle, we should be able to find deals. At the same way, when you look at markets, you can do deals in any market, but what I'll caution you is be careful about secondary and tertiary markets, because sometimes the deals look very attractive, but you also know that there's a reason why people want to invest in the primary markets, because the risk is lower, because there is a lot more population, a lot more diversity in employment and things like that, right? So on top of that, when you're looking to do deals, it's very imperative that you focus on one market. I know, Daryl, you said two markets, but I think, when you're starting out, I would even say start with one market, try to understand the market dynamics. And a lot of the time, people who are starting out, if you have a lot of money and if you invested a lot of deals, then you can invest anywhere you want, right? Because you have the knowledge and the experience. I know a lot of people who invest nationwide, but most of the time we are looking to invest in our backyard. So we have to at least start with, if you live in a certain city, understand all the market dynamics of that city. And if your city is not big enough, or if your city is not ideal for investing, so basically you're looking for population growth, job growth, crime rate, and a bunch of other factors as the main condition for investing in that market. So if your market is not great, then pick the closest market that is actually attractive for you to invest in, and then study that market, know everything that's happening in the market. And at the end of the day, our business is going to be successful based on more people that we know in our market that can help us when we need help. So one of the things that we realized in our investments where we shifted all of our deals to Dallas market. And part of that was most of our team is based in Dallas. And that has really become a blessing now. Now the market is really tight. Properties are not performing as good as it was before. So being local and being able to go to the property every week and see what's happening on the grounds, it has become a huge blessing. And we have also changed our management strategy. Now we are more, managing the properties ourselves instead of relying on third-party management companies. So we could not have done that unless we were local, right? So there are additional benefits. But like I said, when you're starting out, pick one market, learn the market, create relationships in that market, because it's all about having relationship contractors, property managers, all the other resources that you need in that particular market, right? And then once you've done a few deals, you can go do deals anywhere you want, right? That's usually the way that works out.
Cool. Thank you. I want to come back to the rent growth, because I think that was what you said there was very important. How the rents, depending on the markets that you're in, you're either going to see some of the rents going up, some of the rents coming down, so forth. But in the market, I think you said in Dallas market, you said the rents are starting to decline a little bit. Did you say?
Yeah, no, not the rents are starting. Obviously, the rents will decline, or people are offering more concessions. One way or the other, your top line revenue is going flat or a little down. But the vacancy is increasing in most markets in the US, and the rent growth, like year-to-year rent growth, is also flattened out in most markets, or in some markets is negative. So when you're underwriting and they say, okay, this is your rent, and I'm underwriting with a 3% increase in rent next year, which may not be true, right? That's not happening in most markets, right? So you may have to underwrite with, year 2 is a 0% rent growth, or even a negative 1% rent, right? So that's kind of, you have to look at each market and see what's happening.
Excellent. So when it comes to wanting to know about the year-over-year growth, I know you and I have sources, right? I have Prexy, I use CoStar. I do believe you have CoStar. I know you have ROI-Muse. I don't know what other platforms you have. But when it comes to year-over-year rent growth, making sure that number is correct before you start dropping in 3 and 4 and 5% in your rent growth. Where do you, or where could you recommend to someone that's not in the commercial, that's not, I'm gonna say that's not commercial brokers or commercial agents and have sources? Is there something that those people can use or go to try to find out, at least get an idea of what the year-over-year rent growth is that can help them with their projections?
Yeah, so I have the same tools that you mentioned. So CoStar, Cruxy, Site to Do Business, and a few other commercial platforms. But not everybody can afford or needs access to all of that when you're starting out. So
Correct.
it's the same thing as people ask me all the time about where do you get cap rate, right? What is the market cap? The best source for any of this data is knowing your market. So going back to your previous question, Del, that's why it's important for you to know your market, because you don't need another source. You can just look at what's happening in the market. You can look at every deal that's coming to the market, and then you can just start capturing the data. I remember when I first became a real estate agent, one of the first things I did was study like a lot of appraisals in that market to see how appraisals are adjusting, for a bedroom or a bathroom or, on commercial property for different attributes of property, right? So that is how we learn, by observation. So you can never do that if you're looking to do business in multiple markets, right? Unless you have a big team who can do that for you. When you focus on one market, you will know what the rents are. You don't need to go look in another source that you know exactly a C-class property, how much the rent would be for 1 bedroom, 2 bedroom. You also know over a period of time, this is how much was the rent last year, this is how much the rent is this year. So you can get that data, but for convenience, we use tools like, these data providers. But another good source for this data is your property management company, right? So you should be friends with property management companies for the type of property that you plan to buy, right? And property managers have this data because they have multiple sources. Your realtor has this data. It's not like data is not available. If you are if you are a client of mine or client of Daryl's, we'll be happy to provide you with that data, right? Because that is we do that for our clients all day long. What we cannot do is share that data for anybody else, right? If you're not a client, right? But that is, but there are data is available for property managers, your brokers, and your partners. There are different ways you can get to the data, but don't underestimate the power of knowing the market and observing the market, because it's not just your rent growth. You need to know how much are the taxes, how much are the insurance rates, how much are the operating costs for similar properties. There are so many things that you need to know, and all of that is by knowing the local markets. The best advice I can give anybody who's new is get your hands on every single property that comes to the market. Request the P&L, request the rent roll, start studying those, start understanding, what you see pattern, and pretty soon you will start to see a pattern on, what kind of data you can use for your own onboarding.
Fantastic. Well, I'm going to be shifting just in a minute to a rent roll and a T12, but I want to ask you a question. When new people are reaching out to these brokers, and I just want to hear your opinion on this here. When new people are reaching out to brokers, and brokers say these words right here. They say, show me proof of funds. When you hear that, I don't know if that's ever happened to you, but when you hear that, what do you say, or how do you handle it?
Yeah, so I'm an investor. I'm also a broker, right? So I play both sides. I mean, I know a lot of people on this call are most likely both agents and investors, right? So we know we all have to start somewhere. So I never look at people the way, and obviously, like the saying goes, don't lie to your doctor, don't lie to your your lawyer, don't lie to your priest, and you can also add, don't lie to your commercial broker, right? So to that, right? So what we want is we want you to tell us the truth, right? As I'm playing a broker, wearing a broker hat now. So if you're new, just tell me you're new. Don't pretend somebody that you're not, right? Because if I sense that you're a total fake, I don't want to work with you because it's just a waste of my time. But if you came to me and said, I am brand new, so can you help me through the process? What do I need to do to, this is my goal. What do I need to do? Proof of fund, we all know is not that important because most people like the GOB network, right? You can go find a deal and bring to Daryl and he will get it funded, right? So that is the power of it being part of a mastermind, right? So proof of fund is not important to me, but it's more finding out in a who are your partners, how are you, what is your experience level? Because as you know, when you submit offers, most sellers are not going to take, especially in today's market, right? Because deals are falling apart left and right. So most sellers and most brokers are not going to take you seriously if you're a first-time buyer, right? But how do we mitigate that risk? One is, okay, bring somebody who has experience with you, right? Show a higher net worth, show a higher liquidity and things like that. So what the first step I do, Daryl, is I tell them, okay, who's the group? If five of you guys want to come together and buy a property, let's get you qualified by a lender first, right? I don't ask for proof of funds or any of that stuff. I'm going to send you to a lender. I'm going to recommend or not recommend. I'm going to refer you to few of these lenders. You guys talk to them and see how much you qualify for. And if they're not willing to take that step, then it tells me that they are not serious. Somebody who's really ready to take that next step, they would do what we advise them to do, right? Because we know how to prepare them for success, right? We know that their offers are not going to be looked upon unless there is a lender who can vouch for their qualifications, right? In most of the time. So we are preparing them for, we explain it to them that we want to help you, get your goals. These are the first step. Go talk to a lender, get a pre-approval or at least some kind of something from the lender saying that, oh, you're approved for $10 million or you're approved for $1 million, whatever, right? Whatever that number is. That gives me, show me that, okay, they're serious about what they want. But you're right. Most brokers, it's not because they're bad people. It's just, everybody goes to a seminar and wants to do a deal and they're not ready to do the deal. And brokers don't get paid unless deal closes, right? So we are always have to protect our time.
There it is. Okay. Thank you. Did everybody hear that? The reason why I asked that particular question, it is because of all brokers are not going to ask you that question, right? But the first time I was asked that question, I was like, what? So I said to the broker, I said, come on. I said, come on, man. There's really no such thing as a proof of funds. That's what I said. I said, now listen. Then I came back and said, listen, I'm a commercial guy with KW. What did I say that made you think I was new? And I asked him that question. And there was something, he stumbled all around. He didn't want to answer, but he stumbled all around. And then he said, I got you, man. I got you. All right. And ever since then, him and I have been friends. So let's jump into the next part. Because when you get into your underwriting, and whether if you're reaching out directly to the seller or the broker, there are some documents you're going to need. Now, if you're dealing with a broker, he's going to send you the offer memorandum, the rent roll, and the T12. If you're dealing directly with the seller, hopefully the seller will send you the rent roll and the T12. Okay. So, and I'm going to share that. So, Joseph, I just have this question. When you reach out, say to, you may be working with a new broker, or you may be working with a direct to seller. They send you, they say one or two things. They say, I don't have that. or they send you something that's 2 years old. How do you handle that situation?
Yeah. So if the property is professionally managed, right, there should be current rental and current P&L. If it's self-managed, I hope that if it's a beginner property, they have the right set of books and data available, right? And they have help. We find that a lot in smaller properties. Mom and pop operators, they don't maintain any records the right way. We always advise people that don't worry about it too much, right? We can figure that out as we go. Most of the information that you need, you already know. You know how to find the market rents and see, what rents you can get for that property. You can look up the tax record and see how much taxes they're paying. You can call your insurance guy and get a quote for this property, and you know exactly how much insurance you'll be paying. Then what is left, right? Management fee. You can call your property manager and find out how much they're going to charge you for management fee, and they can also tell you, based on industry benchmarks, this is how much you should budget for repairs and maintenance and for utilities and things like that. So most of the information we can reconstruct, but it will make it a lot easier if they can give you the data. But if they don't give you the data, you just have to, do the extra work to get that output together. So it's not that difficult. But sometimes they withhold the data on purpose, right? That is another problem, right? That means that they don't trust you enough, or they don't think you are a serious buyer, right? What you have to really, I've even for bigger properties, they tell you, send me an offer, and like, can I see some data before I send you an offer? Because you will be upset if I came up with a lower price, right? If you want me to make the highest offer, then I need to see some data, and it takes a little bit of convincing, and eventually they'll come around to provide that. And it's also part of building rapport, right? You have to build rapport with the seller and the broker, right? If don't be, don't belittle them. Just work with them, and convince them that you are a serious buyer, and and once you start building that relationship, and once you're persistent, they'll work with you, right? So they may not open up to you the first time you call them, but just be friendly. That will eventually get you there.
It sounds like to me that you're saying build that relationship.
Yeah, build rapport. That's the most important thing in any business.
That's what it is. You got to build that relationship, everyone. So, everyone, okay, so Joseph, let's jump into just a little bit.
What's that face for?
Because I didn't see the rest of my screens. I'm like, where are they?
Oh.
But Zoom has changed. Zoom has changed the way you do things now. So okay, so here we go. Let me see if I could go back to here. All right, so I want to start up with a rent roll. So a rent roll, everyone, is very important to have. It tells you a lot of things, right? But Joseph, when you're looking, when you and your team are together, and you're looking at that rent roll, what is it? What is it that you're looking for on a rent roll? What do you want it to tell you?
Yeah, so the rent roll, I mean, only thing I really care about is what is the average current rents in a rent roll, right? And then you also want to pay attention to how many of those leases are new, kind of give you an idea about the turnaround at the property, right? To see how many, you sometimes will find properties where, everybody is was all the tenants are there at least in the last 3 months, right? Before they decide to sell the property, right? So, and they may not be qualified tenants, and you may end up with a lot of delinquency and things like that. Those are things that you look for. I mean, as far as underwriting goes, your simple thing is, okay, just summarize the rent roll. You can look at what is the weighted average, of rents by unit type, and then you look at the market and see, how far apart they are. If you are, I assume a lot of us are value-add investors. So if you're looking for value-add opportunities, that's the number one thing. You want to find out what is the rent delta between market rents and current rents at the property. So it's basically, that's the easiest thing to do. And that's the easiest thing to outsource to somebody that you train also, to say, go to the market sources that we have, get me the average rent for that area, and then get me an average of what the rents are at this property. And if there is not much difference between the two, we typically don't even look at it. But if there's at least a few $100s different, then we'll say, okay, let's dig further to find out what the opportunity is here.
Cool. How do you, when you're looking at the rent roll, do you take NTVs? Do you put any weight on NTV's notice to vacate? If you, let's just say that you had, it's 100-unit property, you have 20 that says NTV. Do you put any weight on the NTVs?
I don't personally. I mean, obviously, you want to know how much delinquencies there currently, right? So that's the more important thing. What is how many people are behind in paying rent, right? So that is something that you're going to inherit. Once you have been managing properties, notice to vacate and things like that. It's part of the game, right? You have to get used to it. There is, especially in C class, B minus properties, you're going to have some, 50-60% turnover a year, right? So it's just keeping that property operating at the highest efficiency is how you can get success, right? Because I always compare it to Southwest Airlines or any of these airlines that they know how to, land in an airport and put the plane back in the sky in 30 minutes, right? So can you put a unit back on the market and leased up in 7 days or less? So those are the things that is part of your operations that's going to make you or break you. If the property, if they, obviously it's a factor that you look at notice to vacate, but if you see too many of those, then you have a systemic problem, right? But a few of them are not going to scare me because we know that our operations and our qualifications, will be a little bit better, will improve that. But at the same time, you have to look at the market and the location of the property to see if that's even possible.
Gotcha. Okay. Okay. Let's jump over to the T12. Excuse me. So, everyone, this is a T12. It's just a sample. That's all it is. It's not nothing, nothing real. But this is just a T12. So, so Joseph, what would you say to new investors when they have this T12 in front of them? What would you recommend that they look at? And what is it? Well, before I get into that, what is it that you're looking for from this T12? Is there a story that you're looking for? What is that you're looking for?
I think the first order of business is to look to see if they are doing accounting properly. Like a lot of the time we get T12s and if you just look at the bottom line for net income and they have not done it the right way, that they have included the capex and they have included the mortgage and everything in there, your numbers are going to look very low. So the first thing I look at to see, okay, is everything properly done here? So I don't have to remove some lines and add some lines. Remove some lines, right? Then you look at what is obviously missing here, in the operating expenses side. If there is something obviously missing, like a lot of the time management fee is missing or asset management is missing, we need to add those back, right? And then you want to see a trend, right? To see what is a trailing 12 months look like? What is a trailing 6 months look like? T6, T3. I don't really look at T1. We look at T3, T6, and T12. And then you're looking for anomalies in data, right? Sometimes you want to understand what's happening in the property because you'll see that, in 1 month there is a $5,000 expense and every other month there is $500. So what happened for that? What happened that month? Why is it $5,000, right? So those are some of the things that you can use the software to kind of see that, hey, what are the outliers in the data? And kind of, so instead of looking at every And then also small things like, if it looks like this looks like a bigger property, if there are some expenses of $500 or $1,000, nobody cares, right? Because, managing big properties like that, you're looking for the big numbers and see which ones that you can positively affect after you buy the property.
Okay. So, but, in reference to that, I want to jump to other income, but I just want to go back because you mentioned two things, and some people may not be familiar with what you had mentioned. T3, you said, I know what a T3 is, I know what a T6 is, but some people may not know what T3, T6 is. So what is a T3 and what is a T6?
Yeah, so T3 is just looking at the last 3 months. So if you're looking at the data now, we are in April. So you want to see what happened in January, February, March, right? And then you kind of take those 3 months and then analyze it. So you can analyze it by just multiplying by 4, right? So that will make it so you can compare T12 to T3. So that will show you a trend that if some of those numbers are, which way they are trending. In some cases, in most cases, you will see rents are better in T3. So you can use a T3 number probably to underwrite your deal. Obviously you want to look at market rents as well. But if you are, if you want to look, but sometimes you may look at T12 for your expenses, right? Everybody does it slightly different, but we look at each line item and see whether we should use a T3 to underwrite or a T12 number to underwrite. So, but it's more importantly is showing you a trend of what's happening in the property. Is the property steadily improving from last 12-month average versus last 6-month average versus last 3-month average? That's what we're looking for.
Gotcha. Okay. And so now I just want to ask this here. So I always come down to the other income. How do you look at, say, late fees, fees that like fees that when you take over, you may say, okay, so here's a late fee charge, insufficient check fees, and stuff like that. How do you look at income such as those, like late charge fees, insufficient fund fees, stuff like that?
So, I mean, so when we sit down and really start looking at the data with a fine comb, the question that everybody should ask is, what gives rise, right? So what gives rise, meaning, okay, I see a $10,000 for that month for late fees, and I see consistently, $10,000, $12,000. So what is the average late fees people are paying per month? That is something, you may not be able to, especially if you're operating the property well, you don't want to see any late fee, right? You want to see very minimal late fee, right? So, but how much of that is affecting the NOI, right? Obviously, that late fee is affecting the NOI, right? Making the property value look better than it may be, but you have to find out, why is so many people, paying late fee? Again, I don't know just by looking at the data here, knowing how many units are there and what's the average per tenant and so forth. But but you have to ask the question, whenever you see something that looks odd, why is it happening at that property? And is there anything that you can do to fix it?
Right. Do you when you see late fee charges, do you just because some people will fade it out over a period of time, and some will not include the late fee charges at all in their underwrite. Do you just fade yours out over a period of time to reduce them?
No, I think if you're creating a pro forma, I would not put, personally, I would rather not put any late fee in part of my pro forma, because, it may be what is there in the past, and it's also going to be some of that's going to be there in the future, but I don't want to value the property based on late fees.
Gotcha. Okay. All right. So I'm just going to jump back to your students. One, just right quick. I know you said a lot about the rent roll, and I don't know, you may wind up repeating some of the things you said, but what do you tell your students about the T12?
I mean, it's what it is. The number one thing is you have to, there's always an argument about whether you should make an offer based on actuals or whether you should make an offer based on pro forma, right? That's always a debate of, and most of the time, sellers want to sell on a pro forma and buyers want to buy on an actual. So that has been a battle that's been going on since biblical times, right? So that's always been the case. But my thinking is, you should always make your offer based on a pro forma, but you can always make the pro forma to match the actuals if that's what you choose to. You have to look at how you're going to operate the property. A lot of the time, your expenses to operate the property may be much higher than what the seller is currently doing. So in that case, if you use the actuals, you will eventually end up overpaying for the property, right? Because your budget is going to be much higher to operate the same property compared to what the seller is showing you in the T12. So T12 gives you some perspective on historical data. It also gives you some ideas about how things are averaging. But at the end of the day, you have to sit down with your team and your property management company and create a budget. So when you create a budget, that becomes your pro forma of how you're going to operate the property. But it's always good to have a historical reference to see, is this even possible, right? If there's for example, let's say they're spending, $1,000 for payroll per unit, right, per month or whatever, right? So can you do it for $1,000 a month? And your property management company may say, yeah, that's never going to happen. It's going to be $1,500 per unit per month, right, for payroll and the staffing we need. So that will be a good example of why you want to underwrite the deal with using your budget and then see where you end up. Now, once you're done with creating your pro forma, then you can compare actuals and pro forma and try to make an offer on actuals, right? If actuals are lower, the NOI is lower in the actuals. But
Right.
most of the time, we end up seeing that our NOI in a pro forma is lower than the actuals. So we want to make an offer based on our NOI.
Fantastic. Fantastic. So I know we're coming down to the wire, and Joseph, I want you to talk about ROI-Muse. I want you to talk about it. Tell us about ROI-Muse, what it is. Tell me about ROI-Muse.
So ROI-Muse, we are trying to reposition this as a community of investors and brokers. So we started with creating some underwriting tools, and then one thing led to another, and now we are a full service coaching, training, and a community. Like we have a meetup group. We have the software is not just underwriting anymore. It has become more of a CRM system. We have property marketing where you can create your offering memorandums and your flyers and your property websites. And then we are basically becoming, our goal is to become a one-stop shop for agents and investors in commercial real estate and also in multifamily, commercial multifamily both. But our ideal customers are beginners to intermediate level. So we don't position ourselves as a company that services to the big syndicators or the big guys, right? I think there are plenty of other tools out there. Our philosophy has been let's focus our ideal customer profile on beginning commercial agents, beginning commercial investors to an intermediate level commercial investors and agents. So that's been our philosophy, and we will stick with that. And so we're building tools and other services that can benefit them.
Right. And I know you hold your meetings, and you also invite I still get invites and everything. I'm sorry I don't come to some of the invites. I just be busy a little bit. But if people here would like more information, would like to join you on your calls and stuff like that to learn more about ROI-Muse, how can they get in contact with you?
So I will put the link in the chat. So if you just go to
Great.
www.roi-muse.com, and once you get there, there should be somewhere on that page to say register for free training. That's the best way to get into our system. So once you register for the free training, then we will notify you of all of our events. So we would, that, like Del was saying, we do a Friday event called Commercial Investors and Brokers Alliance. It's a meetup group just like this one, right? So we just bring in guest speakers and discuss different topics. And then on top of that, I do a boot camp style training. Most of these are one day multifamily, beginners boot camp or intermediate boot camp or whatever we do. right? So those are the things that 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 you can connect with us and be part of our community as well.
All right. All right. So Joseph, can you take one question?
Sure.
Okay. Alicia. Alicia asks, what was the toughest investment you had? Why and how did it affect your underwriting? How did you get through that situation?
Well, the toughest investment was my first deal, right? And it was lack of confidence, right? Like everybody else, right? We can't pull the trigger because we don't know everything, right? So that is always going to be the hardest deal is your first deal. So it's kind of like, think about that you're trying to push a boulder up the hill, right? The hardest part of that will be, the first, getting it to move, right? If you're trying to push a big stone up the hill, to get it to move is the hardest part. And that's where most people get stuck and they give up, right? But you have to realize that once you become part of a community and if you have mentors and if you have people to help you, once you get going, then that journey will accelerate itself, right? I started investing in single family properties, then went into small multifamily properties, and now we are doing large multifamily commercial construction and things like that, right? So the time it takes to do your first deal, for that amount of time, you can probably do 10 more deals in the future, right? So the first deal is always the hardest.
Fantastic. Joseph, I want to say thank you very much for coming. Thank you for sharing with us here at the Commercial Multifamily Masterminds. I really appreciate you. I learned. I'm gonna tell everyone. I learned a lot. My whole objective when I got into commercial multifamily was to learn underwrite. And I used to go to, if I heard underwrite, I was going to be there. And that's one thing that made me join ROI-Muse, because they were about underwriting. And I joined. And so if y'all know my background of underwriting, I've taken many courses and stuff like that. I've read many books, joined many programs. But I'm gonna tell you something. I would recommend ROI-Muse. They have, I love their platform. The platform where you input your data and everything, and it puts it really works with you and puts things together. But Joseph, I would like to say thank you. And if anyone, listen, everyone, if you do sign up, let them know that you heard about ROI-Muse from Commercial Multifamily Masterminds. All right. Let them know. Say, hey, Dow told me to tell you I heard about it. No, he's not paying me, so I'm not getting paid. But just let them know. Say, hey, I heard about you on the Commercial Multifamily Mastermind. All right.
Hey, Daryl,
Yeah.
let me put a plug in here. Hey, Joe, how you doing?
Hey, James, how are you?
I'm doing good, Joe. I'm going to the boot camps. The boot camps. Several years ago, your boot camp was like a 2x. Several years ago, it was like a 2x. Over the weekend, it just passed over the weekend, it was like a 8x. The reason I don't say 10x is because they will not leave room for you to grow. And I'm just saying, man, like you have grown, have grown quite a bit in the past few years. Appreciate it, man.
Thank you, James. Thank you for the plug. We'll take it, right? When you're in business, guys, don't be ashamed to pitch your product and services, right? You're going to be your own best advocate. So and if you can't sell, then you should not be in business, right? So keep that in mind. Always be selling. I mean, not obnoxiously, but that is your biggest responsibility. You're not doing your company any service unless you're asking for other people to do business with you.
There it is. That's a mouthful right there. And I was going to say any parting words. I think that's just well that, right?
That was my parting word.
Yeah. So Joseph, I want to say thank you again. Thank you for joining us. Thank you for coming and sharing. I don't like to say golden nuggets because sometimes I think we be hitting platinum nuggets. You know what I'm saying? We be way above gold. But I want to say thank you. And if I could, last thing here was when I first joined ROI-Muse, said to Joseph, I said, I want to help you raise capital. Joseph said, I think he said, did Joseph say $1 million or $2 million? think he said 2 million. You said 2 million. I think
He
it
said
was
2 million. Yeah, I don't
2
know.
million. That's right. He said, well, he said, when you could raise $2 million, come back and talk to me.
But we should talk
So
now.
Joseph, I raised $1 million. I'm halfway there. All right.
It depends on the deal, right? So it's not like a 1 million or 2 million, but you know how it is. Usually we want to
Yeah.
keep the team smaller. So if you're raising $10 million, you want at least everybody to bring in at least 2 million. But if I'm doing a $5 million raise, hey, 1 million is more than enough.
All right.
Hey,
I think I
Daryl,
got me. Hey, did I get me
I
a
have
seat at the table?
I have
Yes.
I have 500,000 of soft commits. Let's put that together. Now we're at 3/4 of a
There
way.
you go. There
Hey,
you go.
there you go. So anybody else got another that can pitch in, make it 2 million? Let us know. James, again, thank you so much for
Well,
coming.
thank you so much, Daryl, Alicia, and the Multifamily Mastermind Group here and GOB Network for having me here. Daryl, I want to invite you to our meetup. So I like you to come and tell your story about
Okay.
what got you started and your background in the military and all of that stuff, right? That'll be inspirational for a lot of people, right? I think we will
Sure.
extend that open invitation here, and we'll make sure it happens soon.
Let me know. I'll be more than happy to join.
All right, sounds good.
All right.
Thank you, guys.
Thank you.
Huh?
All right. Thank you, everyone. So now listen, everyone, you know how I do this. If you want to stick around for another 30 minutes just to talk with me and to get to know me better, since we're going to be working together on some investment opportunities, please stick around. But if you got to depart, I understand. But we're going to cut this off, and now we're just going to chat. Thank you all for coming out. You have a blessed day.
Thank you.